Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Jeannette Lowe, managing director and Washington research analyst at Strategas. Jeannette, how are you doing today?
Doing well, Ross. How are you?
Doing very well. We're obviously going to talk government shutdown here. I'll go ahead and date us. It is Wednesday afternoon, so this is obviously a quickly changing story, but I want to get your sense of a couple things. One, how you think this plays out. Two, why this could be potentially different from other shutdowns in the past in terms of market and economic impact. And then three, like what the big sticking point is, what the big policy provision is that's causing this in the first place. So a weighty question, but I'll just turn it over to you to get your insights.
Absolutely. So we think that this shutdown is a little bit different from past ones. The average shutdown lasts about 8 days. So as you mentioned, it is already the eighth day of the shutdown. We do think that this one's going to last longer because we think both sides are quite entrenched in their views and are not really willing to budge. So this could actually go into the third week of October. So it could be a much longer shutdown. We need to see more pain, we think, before we actually get the two sides to come closer to an agreement to reopen the government. The problem with having a shutdown is sometimes it's easy to get into them, but it's hard to get out of them. And so the federal workers will not receive a paycheck on Friday, the October 10th. The military would start to miss paychecks on October 15th. That would start to put some pressure on Congress to come up with a deal. We're obviously already starting to see some other issues with like air traffic controllers and there being flight delays. So that'll start to put some political pressure on members of Congress as well. And then obviously one of the big sticking points about all of this is the expiration of the more generous Affordable Care Act subsidies. They expire at the end of the year. The reason the Democrats are holding up a continuing resolution to keep the government funded is because they want some solution to have those subsidies extended, maybe for a year, maybe for 2 years. Obviously, they said they want it permanent. We all know that's kind of a little bit too far. But they want something to kind of show that. As we get closer to November 1st, when Affordable Care Act open enrollment begins, that's when you'll also start to see more people getting notices of how much their premiums will increase. There is an expectation that it's going to be about an average 18 to 20% increase in healthcare premiums. That is also going to start to put some political pressure. But we think we have to get a little bit deeper into the month of October before we actually might start to see some resolution on this. But that is ultimately where we're headed. To your other question about how this could be different. So we've noted in the past that shutdowns are not major events they don't cause a major hit to GDP. They don't have a major stock market impact. And that's usually, again, because they are shorter in duration in general, and because they usually happen at the beginning of the quarter. And then there's time for the economic growth that has been to some extent lost to be recouped later on. But this could be different if the president were to make good on his threat to begin to do large reductions in force of the federal government. This has been a threat so far. They have not taken these steps, but if we actually were to see significant numbers of individuals lose their jobs as a result of this shutdown, not just being furloughed and coming back, but actually being fired, that could then have a bigger impact on GDP. But we would have to kind of see what those numbers look like to have a better idea of what kind of impact that might have.
Right. And obviously, that would come at a time where the labor market is already weakening. That was a big impetus for the Federal Reserve to cut interest rates. So a difficult time for this to be occurring as well. And then the other big, kind of macroeconomic DC story for most of this year has been tariffs. We're obviously heading towards the Supreme Court hearing oral arguments for the case, against the administration's tariffs, or at least a wide swath of them. What's the latest update there, and how do you see things playing out on the tariff front?
Yeah, so the Supreme Court will hear oral arguments on the case about whether or not the president can impose tariffs under a specific authority, the International Emergency Economic Powers Act, also called IEEPA. That is going to be when the oral arguments happen. We don't necessarily know when we'll have a decision. It could actually be by the end of the year, but it could also be moving into either January or February, maybe potentially in how divided the justices are on their decision. But what we're watching to see is right now, I think the consensus is that there's an expectation that these tariffs are going to be overturned. And sometimes there's an expectation that tariffs would actually reduce in size. We would just have a caveat to that. We think it's really important that the Supreme Court decision has major impacts, but it's more about how the president can impose tariffs, not whether he can impose tariffs. So if they say he cannot impose tariffs under IEEPA, he has other authorities that he will then use to reimpose these tariffs. And so we would basically get back to the same level that we are currently at today. But there also is a possibility that the Supreme Court could actually uphold these tariffs. We had a split decision at the Court of Appeals. The Supreme Court has tended to be a little bit more deferential to the president in some of the other cases that we've seen go ahead of the Supreme Court. It's not to say that that's going to be what the result is here, but it's definitely something that we're watching to see. But the consensus, I think, is of the view that these tariffs are going to be overturned. There is definitely a possibility that they could remain in place. But there's also a possibility for this more nuanced decision that there might be that maybe people aren't expecting. But ultimately, the biggest takeaway is that even if the tariffs are overturned, that will lead to some short-term tariff uncertainty. We have the administration knowing that there is a backup plan ready to go if that were to be the case, and they will reimpose the tariffs under other authorities. It just might be a little bit more cumbersome than it has been in the past.
Right. And several of the sectoral tariffs and some of the earlier China tariffs were levied under those different authorities. So we know that there is a pathway to do so. Jeannette, this has been chock full of information, incredibly useful at a very uncertain time. So thank you so much. We'll look forward to talking to you again soon.
Awesome. Thank you, Ross.